So I guess just starting things off. I mean, this is a topic you're so passionate about, but for everybody who doesn't know, why is this event important to you, and what are you excited to share about your path and as a woman in finance?
Yeah, thank you. I see a lot of friendly faces, familiar faces in the audience, so it's nice to see all of you. Just to kind of talk about women in financial services for a minute and carry on what Alexandria said. We do think about financial services differently. And so I'm going to talk to you about my perch as a fintech entrepreneur who's had an intersection into industry for a minute, because I think women are solving the most complex problems of our time uniquely. We're tackling things through at least the provision of technology, through different investment themes and cycles, things that are meaningful to society, serving the underserved and the underbanked. As large asset managers like Fidelity, it's women that are leading the way and using the capital markets to affect change in the way that companies treat the environment. We've all heard about this ESG movement that's so profoundly important. If you look across the continuum of women or people in financial services, more often than not, those are women. And so it's really a great time to be in financial services. So I'm super passionate to have a chance to share a little bit with you today.
Yeah, we're glad to have you here. And you've had so much success, growing companies and being part of a companies. Could you tell us a little bit of the story behind Capital Markets Exchange and some of the things that you learned from that experience?
Yeah, so Luke has asked me to share a little bit with you about my startup before the one that I'm working on now. And so Capital Market Exchange, or CMX, was founded in the wake of the credit crisis. I have this thesis: we should never let a good problem go to waste. It's the best time really to solve it, right? Never let a crisis go to waste. And what the thesis was, I was actually at Fidelity, and when we looked across, the 2008, 2009 time period, really what happened was a confluence of factors that we had not historically modeled. And more importantly, they were factors that we were all talking about that drove to the credit crisis. There was a great understanding of the challenges of liquidity in the fixed income marketplace. There always has been. There was this understanding, of course, that risk was not completely modeled. We had limitations in our analytics and our algorithmic focus. And of course, we're still using like French FAMA factors. Those guys have been around since the 40s, for any of you who are nerds like I am. And so what I wanted to do was step out of that and look more closely at the way that we could collect and analyze factors that were oftentimes non-financial. And so went out and raised a round of investor capital to do that. Okay. And so today we would call, in the 2012 and 2013 period, when I would say to people, I want to go out and scrape the web and bring in opinions or words that professional bond investors say they suggest matter to near-term spread changes. Today you all would talk about that as unstructured data. When I would say that to people at BlackRock, they would be like, are you crazy? What does that mean? And so, but that was the thesis. We grew it to where we had about $6 trillion of investable assets on the platform. And we had a chance really to think about more broadly this evolution of fintech and what it meant to model not in traditional financial factors, but now non-financial factors. And so that's where I kind of get my passion for data now and the provisioning of it.
I mean, let's dig into that for a little bit. So I guess, one, can you explain what unstructured data is to those of us who might not be aware? And I know data has been a huge part of your career as well, and talk about some of the ways you've leveraged that and where some of those opportunities are.
Yeah, so let's talk about data for a minute. Does everybody know what unstructured data is? You probably do. Yeah, most of you do. So you think about financial data in particular and its use, right? It fits neatly. It's normally numeric. It fits neatly in rows and columns, and you can run a linear regression around it pretty simply. You can perform a lot of analytics. Unstructured data, for those of you who don't know it, is that broad volume of data that we see occurring in text, that we see occurring in video, in speeches. How often does someone tell it, like, does Lagarde have a speech and all of a sudden the whole global macro environment changes because she has said something that's meaningful? And so I think the abstraction out of that type of data, not to mention the volume and the veracity of it, requires us to adopt emerging tools.
Okay.
But back to that question of data as a thesis, I'm actually here, I think I'm underneath the sign of the co-founder of the Fintech Sandbox. which is a Boston-based not-for-profit. And we work with startups free of charge. The team is here. They're sitting over there. Hi, team. Part of them.
Team.
Women, woohoo, gals, to provide high-quality market data, not just structured data, but unstructured data, access to APIs in a free and seamless way, to help really aggressively move the innovations and technology into the marketplace. I also see Bob Leeper here. There's one of our other partners. Benzinga is a partner. That's how I got here. And it was really done because it was a problem I faced at CMX. We were out, just scraping the web. We were trying to gather data very clinically, but yet manually. And so really move forward with this idea that really data is the next driving force for the differentiation in financial services. So let's start a not-for-profit. Just a little plug for the Fintech Sandbox. Is anyone in here a fintech entrepreneur? Please apply. If you need cap markets data, it doesn't cost you anything. We just 3 weeks ago saw in our earliest sort of group of startups that joined us, we had an exit for $550 million, right?
Big deal.
Woo! Go financial services. And it's the largest amount ever paid to date. There will be another one this week, I hope, for an AI-focused fintech called Kensho. So,
And that's a
really,
company that operates almost entirely in data.
entirely in data. The abstraction, they have heavy computational capabilities to extract out written word and also structured text to help you answer questions that if you've ever been an analyst and someone's asked you a question to go analyze sort of current conditions in an industry, for instance, they can now take very much in natural language processing any question you might ask as a financial analyst and answer it with a graphical interface in about 8 seconds.
Wow.
It's a tremendous tool.
Incredible.
Yeah. We can't take credit for all that.
But part of it, at least part of it.
Well, let's just say data is meaningful.
There we go.
Yeah.
That's fair. And out of Fintech Sandbox and other movements and things going on, what are some opportunities that are available for women in financial services that weren't previously?
Can I just say, women have always had the opportunity.
Of course, yeah. You can say whatever you want to.
I think that's what wasn't available previously. I think what you've heard persistently across today say is, and I thought Kathleen McQuillan said it quite well, the woman from Elevate, is that women just haven't seen the role models to do it. But even in the Old Testament, there's a mention of women in fintech. If anyone wants to check me later on my religion, I'm happy to talk about that. But we've been here for thousands of years thinking about the advancement in a very global way, perhaps first in our community and more global, about what it means to be a woman in investing and solving problems. But what's changing, and it's changing universally for the industry, is what skills you bring to it. Okay. Alexandra mentioned, the importance of client-facing capabilities. I actually think really women don't go there. Let the guys handle all that nice stuff. Let's be in the algorithms. Let's code against and remove all those bias that's happening. AI is going to be our fourth platform. It is already fairly ubiquitous. It's soon to be almost in every exchange we have in financial services. Women have an opportunity to be there to help make sure that we don't have bias in the way that those tech stacks are built. We talked about data.
Yep.
I think in the near future, Luke, everyone in financial services is going to have some capability to kind of wrangle that data, ingest it, cleanse it, analyze it. So I encourage and think about financial services and the opportunity for women in those skills.
So it's really analytical skills.
I would say that analytical skills are important, and I shouldn't have poo-pooed the softer skills. There will be room for individuals to do that, but I think women have to take their position in really where the future of financial services is, and it's an intersection of technology and human dynamics.
Okay. And for the skill set that you've built up, you've been a part of massive organizations. You've been involved in tiny firms. Which of those things have you found to be the most transferable?
What's really transferable across all of that continuum is ability to tell a good story.
Okay.
I think you have to come up with a narrative about yourself and where you fit in this environment and what's different about yourself. So I think that's been critical. Certainly critical as an entrepreneur who's trying to oftentimes sell something that before you created it, there was nothing. And my experience at CMX was that. You can imagine walking in the door of BlackRock and saying, I really don't think your models are right. I think what you need to do is not a static factor model that's got 20 years of back testing and that should persist through the next 5 years. I think you should dynamically look for the evolution of new factors that are changing the way that we should look at corporate bond spreads. Really? You know, who are you again?
Yeah.
And so it's good to have a narrative. I think another thing that has been transferable in everything I've done is a very fact-based discussion. You know, ground yourself in the facts, in the outcomes, not sugarcoating things and not sharing it. So even though I tell you to have a narrative about yourself, the other thing is to have your facts straight.
Okay.
I spend almost all my time now in the fintech community, and so there's a long tail of opportunity that's being created through technology.
Yep.
And I think that's the third thing, is become very literate about what the new and emerging trends are, so you can be seen on the edge of that.
And so when you're going to the BlackRocks of the world and trying to have these conversations, you know, how did you even get in the door? How did you get them to recognize, you know, that your thesis, you know, may make sense for them?
Do I have scars? You know, there's, let me look around the room. There's a really good, widely held secret in financial services that we all need to understand, and that's the fear of missing out. If you don't have a seat at the table, largely in financial services, to new information, to new ideas, you know, the emergence of perhaps new techniques and tools, you're in trouble. We actually regulated some of that away through Reg FD, right? There used to be information asymmetry in the marketplace because management teams would tell certain investors certain things and they wouldn't tell others, depending on the size. That has returned to the marketplace, right? That information asymmetry, and it's underpinned by this idea of FOMO, right? Fear of missing out. That's never gone away in the industry. Okay. And so I think, you know, one of the things that helped me was the idea that we were presenting a thesis that was new, that was fact-based, that was rooted, and we used the network effect quite effectively. You know, we were pulling in from their peers. We could able to tell them in a non-proprietary or non-competitive way what was going on in the marketplace that they weren't picking up. And if they weren't in our network, they really were going to miss out that others had a competitive advantage over them.
That's great, yeah. And I love the fear of missing out. It goes back to what you started with, which is, you know, don't miss a good crisis or, you know, a good opportunity.
It also works in dating.
Okay.
Yeah, just so you know, in case you're going to try to date.
I mean, I need some tips. So.
Okay, good.
It's not going well. Thanks, Sarah.
Welcome.
Well, and we'll open it up for questions. Oh, God. Okay.
It's the end of the day, right?
The end of the day.
It's the end of the day.
Yeah,
right?
we're all slap happy.
Yeah.
Snow's not coming until later.
It's crazy.
7 o'clock, 8 o'clock.
No snowflakes.
Good. I did a weather check before we came up here.
Yeah.
All right, the last thing I'll ask you before we open it up to questions is what advice would you give to women who want to pursue careers in, you know, finance or financial technology?
Yeah, I mean, besides those skill development and sort of where you focus, build a network. Really think about very carefully who you want to get to know and who you want to talk to, and seek those people out. Just even in the past 10 years, I would say that there's a complete sea change in the culture of financial services. Where it used to be hyper competitive. If I won, you had to lose, right? The net zero game. That is so not true in the industry now. And so I would encourage you to seek out people who will help you. The startup community certainly feels this collegiality. It's increasingly true in the larger industry, and so make sure you seek those people out. The other thing we kind of talked about, and we talked about my last experiment, which I think is why you kept focusing on State Street. Yep. So I had this team of amazing young women at State Street. When I say amazing, I mean amazing. I came in and I inherited them as I was working in the innovation group. And we sat down together, and I said, okay, let's do a little experiment. because I'm getting too old for this shit. I want to be that person, sorry. I want to be that person that to you that I needed in my 20s, right? Whatever we do together, whatever you want to do to advance your career, we're going to do it. And if I'm wrong, you're going to tell me, and if you're wrong, I'm going to tell you, but it's a safe place to do whatever it is that makes you feel like you're going to move to the next thing. We still don't know if it worked. They've all now gone on to grad school and all kinds of stuff. They're building, I mean, 2 of them are here. Still sticking it out. But I hope that as a woman, you decide to be that to other women and young men too. But on the flip side, if you're just going into your career, I hope you ask for that. You ask someone to remember what it was like to be 20 and the uncertainty of the future and the dynamic and changing career. And you say, I'd like you to be that person to me. It's going to be hard to ask that, and I hope they don't see you as weak. But I just think that for me was sort of where, if you're particularly a young woman or a woman, be that person to the person who's younger than you, or ask for that as you go through, and we'll see if we can't change the world together, because it's going to change on us. We might as well do good.
And I'll provide that feedback loop on the dating tips as well.
Okay.